Welcome to our webinar on understanding compensation. Compensation is something everyone thinks they understand. You work, you get paid, right? Actually, it's very complex. No wonder it's a sector where IRS auditors find the most errors. To help you navigate this sector, I'd like to introduce our presenters. Mary Wade is our new business coordinator. In addition to being a plan consultant, she brings a unique perspective to our webinar, playing in both worlds. Next, Wendy has been working with RSG for over 10 years. She focuses on client service. In her role, she builds strong relationships with clients through administration. Eileen Horton is our newest member and brings a fresh energy and enthusiasm to RSG. Myself, Julie Yanez, is an older member with over 30 years of industrial experience. We hope this webinar brings knowledge on 3 key points: the importance of reporting the correct compensation, how business entity drives how to report the right compensation to us, and how exclusions may lead to more testing. The paramount of compensation cannot be overstated. This slide and 2 others will illustrate where compensation is utilized. It is used everywhere. If your compensation is reported incorrectly, the whole plan needs to be retested. It is one of the main building blocks. Even though it's important, you should be aware RSG does not audit your compensation. What we do is compare it to last year, make sure it looks reasonable, and provide you with a PC to answer all your questions. However, we will work with your payroll provider, but we are not an expert in their system. When you first establish your plan, you are provided with the plan document. The document can answer most of your questions. We understand that the document is hard to read, so you can refer to your summary plan description, or even easier, ask the plan consultant. However, if you'd like to give it a try, I like to point out some key factors. How is the definition of wages defined? Is it W-2, 415 compensation, or 304A? In this example, it uses W-2. What about post-year compensation, which is the amount earned during a year but not paid? Again, in this example, it's excluded. And last, salary reductions, included or not. Again, in this time it's included. As you can see, compensation becomes complex very quickly. Wendy works with compensation on a daily basis and will give you a deeper dive into defining it.
There are 3 different types of compensation that can be used in your plan that you could choose from. The 415 safe harbor compensation, which is often referred to gross compensation because it includes almost all types of pay, except severance pay, which is not included as compensation. And then there are also 3401A wages, which is compensation subject to the federal income tax withholding. And then there's W-2 compensation, which is the most common for employees. And that is reported in box 1 of the W-2. You can also include modifications to this in your plan document to exclude overtime and bonuses. You can exclude compensation prior to an employee meeting the eligibility requirements. And then next, we will show you the W-2 example. For example, you would use box 1 for the gross wages, and then you would need to add back any 401k or Roth contributions, which would be listed in the box 12A. And D stands for pre-tax contributions or 401k contributions, and then Roth would be a double A for the code. And we know that all employees' compensation is reported on a W-2, but what is an owner's compensation? An owner's compensation for self-employed individuals is earned income. And it depends on the type of company. And there are also two sources of compensation for business owners. There's compensation for the work that they do on behalf of the company. For example, remuneration for personal services provided, and also return on investment. For example, profit realized by the company after all expenses have been paid. A qualified plan can only cover employees and only in relation to income earned for personal services provided. And we can't stress enough that a business owner's compensation can be very complex, and it is very important to use a CPA for this purpose for the plan. In order for us to calculate an allocation for a sole proprietor, we would need Schedule C information. And then profit is not a part of compensation. It is earned income, which is the compensation for self-employed individuals. And then I also have an important note for off-calendar plan years. The IRS places a limit on the maximum compensation that can be considered for any single participant in a given year. The limit for 2022 is $305,000, and the limit for 2023 is $330,000. And the annual compensation limit for an off-calendar plan year is based on the limit that applies for the calendar year in which the plan year begins. So for example, assume a participant's compensation is $330,000 for both 2022 and 2023. The maximum pay that can be considered compensation, for example, a plan year beginning August 1st, 2022 and ending on July 31st, 2023 is $305,000, because that is the limit that applies for the 2022 calendar year, which is the one in which the plan year begins. And most payroll systems can easily produce annual census reports that follow the calendar year. And this is generally the same information that's required to prepare the forms W-2 each year. However, for off-calendar plan years, some systems are limited in the reporting. So you would need to produce most likely 2 reports, but you could work with your payroll company to get that compensation. And then we also have the comparison of the different types of compensation, what is included and what is excluded on these 2 pages.
Wendy, can you tell me an example when compensation was reported incorrectly?
Yes, actually, for the 2021 plan year, an employer sent over just the compensation in box 1, but did not include any employee contributions. And I noticed when I went to process their annual employer contributions that the compensation seemed off. So I just went back to the client and they sent over updated compensation. But that is very, important to note, so we don't have to go back and forth several times to gather the correct compensation.
Thank you.
Thank you. Next, we'll
Mary,
have Mary go over exclusions.
Thanks, Wendy. As was mentioned earlier, compensation can be very complex, and adding to that is deciding whether or not to exclude certain types of compensation. The IRS requires that qualified retirement plans use a non-discriminatory definition of compensation, meaning that if you wish to add exclusions to your definition of compensation, an additional test called the 414S test, also known as the compensation test, would be required. When we look to your design of your plan document, all of these items are taken into consideration. First, there are certain forms of compensation we can exclude which would not require this additional test. Things like compensation prior to eligibility date or certain fringe benefits, which are outlined here on your screen. Since we get many questions regarding compensation prior to eligibility, here is an example. If Joe Smith works a full year but he doesn't become a participant until July 1st of 22, we would be requesting compensation from July 1st to 12/31/22 for testing and allocation purposes. It is very common, though, that a plan sponsor may want to exclude bonuses, commissions, and overtime compensation. However, these types of compensation would require that additional testing. So you're probably wondering, if my plan requires this additional test, how do we know if we're going to pass or not? Well, in order to pass the 414S test, the average compensation ratio of the non-highly compensated employees must be greater than or equal to the ratio of the highly compensated employees. The HCE's average compensation ratio cannot exceed that of the NHCE's by more than a de minimis amount. Now, if this plan were to fail, one of the corrective methods we would use would be to test on all compensation with no exclusions. Your plan consultant would review the results and corrective methods with you. Again, to reiterate what was said in the beginning of this discussion, it is very important to provide us with accurate compensation because compensation determines an employee's status level. Are they an HCE? Are they a key employee? It's also used for non-discrimination testing purposes and calculating an employee's and employer contributions. These are all things considered when we're writing your plan document, such as using an employee's compensation from eligibility, as this would help the plan pass the non-discrimination testing and may provide a more favorable employer allocation. Now, here's Eileen Horton, who is going to answer some of our most frequently asked questions regarding compensation.
Thanks, Mary.
Eileen, should severance pay be included in compensation?
So severance pay should only be included if compensation is paid after termination of employment. Regular compensation is employee services, commission, bonuses, or similar payments or other payments which have been paid to the employee had they not termed. An example of this would be a final paycheck.
Thank you. What is the difference between severance pay and post-severance pay?
So severance pay is paid by the employer to an employee after employment had ended, while post-severance pay is unused sick time, vacation time, or any other payment that were not paid prior to termination.
Okay. Are hours worked but not paid until the following year counted at year end?
It depends on what the company is using as compensation. It all depends on the consistency. For example, if using a W-2, payroll for hours worked in 2022 won't be paid until 2023. So this final run would not be reflected on a 2022 W-2.
Okay. Now, what if I or my spouse owns another company?
So compensation from all members are aggregated. For example, employee works for A Inc. and B Inc., part of a controlled group. Compensation from both entities count for the plan purposes, whether A plan, B plan, or both have plans.
Okay. And I think one more question. Can the definition of compensation be changed throughout the plan?
Plans must use the same definition for all employees in applying a particular provision. For example, non-discrimination testing under 401A4. The definition of compensation can change from year to year, and a company can use different definitions of compensation in different plans.
Okay, great. Thank you, Eileen.
We would like to thank you for joining us on our webcast. We know that this webinar was pre-recorded. If you do have additional questions, please reach out to your plan consultant. And lastly, we'd like to wish you a happy holiday season from RSG.